Ever wonder how real estate agents figure out the right price for a home? Well, it's not a guess. It starts with something called a CMA. And without one, you're basically guessing the home's value. Welcome to Strategy Saturday. I'm Charles Carillo, and today we're breaking down exactly what a CMA is in real estate, how it's prepared, and how it's different from an appraisal. So let's get started. If you've ever listed or sold your home through a real estate agent, you've probably heard the term CMA, which stands for Comparative Market Analysis. Now, a CMA will estimate a current home's value by comparing the subject property to recently sold, currently listed, and expired listings in the same area of the same size, condition, vintage, and features. Now, most real estate agents will create a free CMA for potential clients, and CMAs are also generated for buyers, helping them to make more informed offers. Now, a CMA is similar to a broker price opinion, BPO, but a CMA is typically a free marketing tool for a potential client. And we talked about BPOs in episode SS253, and you can check out that episode if you'd like to learn more about what a BPO is. So how is a comparative market analysis prepared? So when a CMA is prepared, there are a number of factors that are taken into consideration. Number one is comparable properties, also known as comps. Now, the agent will research what has recently sold in the last 3 to 6 months in the same or similar area. Number two is property characteristics. This is where the features of the subject property are compared to those of the comps. How many bedrooms and bathrooms, the square footage, the number of garages, the lot size, does it have a pool or any other upgrades, such as a new master bathroom or an upgraded kitchen. Number three is going to be market trends. Now, the CMA also measures the market primarily by tracking the number of homes on the market, their duration, and whether the market is considered a buyer's or seller's market. One additional note is that unless there are exact comps to your immediate area, the client needs to thoroughly review the comps. If you are in a planned community of 200 nearly identical townhouses, you really don't need to leave that community to find accurate comps. Chances are that there have been sales and there are current listings you can base your price and offers on, which makes it much easier to come to an accurate valuation. Now, it gets tricky when there are no nearby comparables or the closest comparables with different features, such as one less bedroom or an extra half bath. One is 10 years older, but has an updated kitchen, but it's on a busy street. Now, rent comparables are one thing I spend a lot of time on when looking at apartment complexes, and I really map out where the comps are and really the quality of those properties and the vintages and really the features of those properties to see if they're actually accurate comps. Now, the best bet is to find a very experienced and active agent in your neighborhood to assist with buying or selling a property. So what are the differences between a comparative market analysis and an appraisal? So a CMA is a free report that is designed to offer an estimated valuation of a property. An appraisal is an official valuation relied upon by lenders, which is paid for by the buyers through their mortgage closing costs. Appraisals are completed by a licensed and certified appraisers, while real estate agents create CMAs. And CMAs are not formal valuations like an appraisal, which is a detailed and standardized report used within the lending industry. And I remember when I took my real estate agent exam, there was a section that explained how agents should not create appraisals unless they were licensed to do so. A comparative market analysis is not an official appraisal, but more of a pricing tool that is designed to assist buyers and sellers in understanding what a home is worth in the market conditions. Now, while an appraisal is a formal official valuation required for a home mortgage, it is included in the closing costs and paid for by the buyers. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at Syndication Superstars. That is Syndication Superstars. Look forward to 2 more episodes next week. See you then.
Have you always wanted to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
This episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.